It's time for a portfolio update, and in this one I'm going to share with you exactly what I have inside of my portfolio, how much of each position I currently own, what I've been doing over the last 1 month since I made one of these videos, and my plans moving forward. If you want to be notified every single time I buy or sell any position, you want weekly portfolio updates, and you want to come and chat with myself and like-minded other investors every single day, then consider joining the Patreon. It's £3 a month, so it's literally less than a cup of coffee that you would spend a day, and you'll get access to the Discord. Hope to see some of you guys over there soon. So here we are inside of my portfolio, and the first thing that you can see is my total portfolio amount, £17,427, £28.99. It's changing. The total invested amount, so the money I've actually put into this account, is £14,361.33, leaving the difference as the total return. This time last month, when I made one of these videos, my total portfolio amount was £17,009, with my total invested amount being £13,008. So what you can see straight away is that since 1 month ago, I've actually added quite a fair bit to this portfolio. I've gone from 13,000 as my invested amount to 14,361. That is something I'm really proud of. I've just been trying to throw the allocated amount each month at this portfolio, plus any other extra money that I have. I want it in here, I want it growing. The return last month, however, was a lot better than it is this month. Last month we were sitting at nearly a 31% return, which is absolutely phenomenal and really does outperform the index. It outperforms the general market, the stock market. However, I knew that that was very good at the time and wasn't going to last. Today we are also doing amazing, 21.35%. I cannot moan. But what I will say, if I'd been scheduled to make this portfolio maybe a week earlier than right now, it would have been a different story. It has been still positive since the whole time that I've had this portfolio, but it's definitely not been, above 20% the whole time, and that's okay. I'm in this for the long term. I don't mind if some days it's up, some days it's down. I don't see this number here and want to withdraw that 3,000 because ultimately I would just be withdrawing it to then just sit in a bank and not really earn any interest. I don't have anywhere in my life that I want to be spending this, so I really want it to be in here and growing. And that kind of answers the question as to, okay, well, some of your positions have gone up a lot recently, really like crazy. Should you take some profit off the table? Now, I do completely understand people that do this. It makes sense. It's a strategy that absolutely makes sense. But for me, I would just be taking that money out of here to then sit in my bank, lose value over time, and then I would be waiting for a dip to put it back in, or I can just have it in here growing and accumulating. So it doesn't make sense for me right now anyway. So just to give you some background about this portfolio, in case you've never watched one of these videos from me before, I started this account that you're seeing in April 2023. So it is quite a new account. It's not even been open a single entire year yet. Outside of this portfolio, I also do have 2 other portfolios. I have my Vanguard, which is my previous year's ISA, which is an individual savings account if you're not from the UK. We can only have 1 of them active per year. So I can't pay money into that, but it does sit there and it just grows over time and I reinvest the dividends. Inside that account is VUSA, which is an S&P 500 ETF. That was for a long time my second largest position. It is now my third largest position, as you'll see in a minute with the ones I've got in this account. But yeah, that does give me a sense of diversification. And again, we will talk about how I may be not so diversified in the current portfolio. And then I also have my crypto portfolio that I don't talk about on YouTube. I do talk about it on my Discord if you do want to join that, like I said at the beginning of this video. And you can see here that the performance of this portfolio has been up, it's been down, it's been all over the place. It's been very volatile, I will say. Some weeks I log on here and I see that I'm up by over 20%, other weeks over 30%, other weeks maybe I'm more like 9%. It's just what it is. It's a reflection of the companies that I have the highest concentration towards in this portfolio. If you're going to have a very concentrated portfolio and you're going to have those growth stocks that are quite volatile, you kind of need to have the stomach to be able to see these massive gains, not get emotional about it, and the massive dips, again, not get emotional about it and stick to your investing plan. And that's exactly what's happening here. If I go out by 1 year, you can see there's been some really substantial dips in the value of my portfolio. Even across the last week, look at this, it's gone down, it's come back up. It's been a bit of a roller coaster, honestly. So let's just take a look at what I've got in this portfolio and my allocation towards each position. I've got a total of 8 investments. You can see them on the screen here. That hasn't changed since last month. Last month, I also had the exact same 8. But what has changed is the allocation between them ever so slightly. Last time, Tesla was my largest holding, and it still absolutely is. However, it has decreased ever so slightly as I've added to other positions. So last time it was over 50% Tesla. It is now basically 47%. Palantir is still the second largest holding in this portfolio, and it was last time as well. We are now sitting at 36.12% of this entire portfolio dedicated towards Palantir. And then we have a few other companies in here as well in a lot smaller allocation. So we've got Amazon, we've got Vanguard FTSE All World High Dividend Yield ETF, which is an ETF of those above average paying dividend companies. There's some fantastic companies in that ETF, and it does pay you a higher on average dividend yield. If I were to get rid of one position in this portfolio right now, if I needed to allocate the money elsewhere, it would probably be that, just because I've got a lot of overlap between that and my VUSA. Then we've got Alphabet, Google, Alphabet's the parent company, Unilever, Diageo, and National Grid. I'm sure you're familiar with all of them actually, but some of them maybe you're not so familiar with. We've got Unilever, Diageo, and National Grid. They are UK-based dividend-paying companies. So I get the dividends from them and I reinvest it into this portfolio. And I think they are fantastic options in my opinion. But what you can see here very, very clearly, I'm sure, is that this portfolio is extremely concentrated towards Tesla and Palantir. It is not the most diversified portfolio you've probably ever seen, but I'm okay with that. Now, some people would argue that by having a portfolio that is so concentrated as this current one is, that I am taking a lot of risk on. Now, yes, I probably am taking a little bit of risk on here by doing it this way, but again, I'm okay with that. The position that I'm in right now in my life and in my investing journey, I'm very much in that growth stage. I can afford to take that risk. I have not added money to this portfolio that I couldn't afford to lose. But do I think I'm going to lose that money over the long term? No. If I had a 6-month period and I needed to withdraw all this money by 6 months time, then yes, maybe this would be risky because these are very volatile companies. We know Tesla goes up and down based on the news a lot. It's a very shorted company. For these reasons, yes, it can be very difficult and very hard on the stomach to own. But I'm really actually quite at peace with having the positions like this so concentrated. And actually, I view it as not being so risky. So let me explain. The first thing to say is that, like I said earlier, I do have that VUSA. So I do have an S&P 500 ETF that is very diversified by nature in my other account. That gives me sort of a blanket to my portfolio. Then I've got Tesla and Palantir. Now, I don't think that my portfolio is that risky by having those two in such high concentrations, because that's where my conviction is. And I spend a lot of my time, if you follow this channel, you'll know, researching and learning everything that I possibly can about these two companies. As I'm learning and I'm growing my understanding of what these companies are currently doing and what they're working towards in the future, I can't then allow myself to not put most of my money in these two positions. It just feels riskier to actually put it elsewhere at this point for me personally, based on my conviction. This is where my interest lies. It's the interest in these positions that allows me to research them every single day. And I think that's really important. You've got to have interest to actually want to own individual stocks, because if you own individual stocks like this and have your portfolio very concentrated, you have to be willing, absolutely, you have to be willing to put the time in to stay on top of the news for these companies, do the research into the fundamentals, know what they're working on that maybe the average Joe on the street doesn't know. Like, I'm pretty sure if I went up to someone and I said, tell me about FedStart for Palantir, or tell me about Dojo for Tesla, they wouldn't know. They would very much probably never heard of Palantir unless they're in the UK and maybe they've heard of this whole NHS deal. And then with Tesla, they probably think they just sell electric cars and that's it. They're a car company. So you have got to have that interest to make you stay on top of it. Now, although Tesla and Palantir are obviously very different companies by nature, there are a lot of crossovers between these two companies. We can talk about the leadership, about them being founder-led. We can talk about them being growth stocks. We could even talk about how they are both at the forefront of AI. Of course, they're in very different areas. Tesla has its EV business, it then has its energy business, but then it also has FSD. It has Dojo, its supercomputer. It's solving FSD so then it can make a robo-taxi fleet of autonomous driving vehicles. And then aside from that, it has Optimus, a humanoid robot. So in some ways, you could actually say that within my positions in my portfolio, I have quite a lot of diversification because of all the different areas Tesla's going into. They're not just a vehicle company. They're into many, many different sectors actually. And then Palantir, they are solving the problem of data utilization. They are making it possible for organizations, government, commercial, to bring all of its data into one centralized source of truth. And then more importantly than that, to be able to utilize and understand that data way more effectively. And that is changing businesses, revenue wise, it's saving lives when it works with the healthcare sector. And that word sector there, Palantir is diversified in the fact that it is able to integrate and work with literally any sector. Its total addressable market is absolutely massive. So again, I'm getting some diversification, if you will, through that means. So you can see on the left hand side here, my current positions, how much of each company I currently own and how it's performing. So if it's up, if it's down, you can see Amazon at the moment is nearly 40% up, which is absolutely phenomenal. But of course, it's not my largest position. It's my third largest in this portfolio. If Tesla, Palantir especially are doing really, really well, that really impacts my portfolio and it will make it go up by a lot in one go. If they are not doing so well, it will have the opposite approach and it will drag my entire portfolio down. Whereas if you're more diversified, you don't actually see those ups and downs of individual companies so much in your total overall return. But let's just take a look at Palantir here. So I'm going to go by 1 month and you can see my average price and everything, the amount of shares I own. I'm going to be transparent here because I think that's really important. Like I said, I only started this portfolio in April, so I'm mega proud of what I've achieved in that time. The total return since I started investing into Palantir in this portfolio is 61%. That is insane. But look at it over the last 1 month. It has gone down by quite a lot to this point here. 1st of November, $14.54 per share. And then it's just gone absolutely crazy in the upward direction. Now it's back on $19.67 per share. I don't know what the market's going to do when it opens today. We'll have to wait and see. But it does swing very heavy towards the up or the down. The same with Tesla. So what's been causing this volatility over the last 1 month? Well, since my last video, we've had the earnings season. So we've had earnings for all of these positions in my portfolio, and they really do move companies like Palantir and Tesla. Palantir had an absolutely fantastic Q3 earnings. It was great. They exceeded expectations, and more importantly than that, they gave some very, very impressive commentary and some very impressive data and results on AIP, their artificial intelligence platform. The growth there, and that wasn't actually released that long ago, the growth there is absolutely insane. It's really, really strong. And we're hearing about their go-to-market strategy of how they will keep growing that. So in November, the current month alone, they are doing more AIP boot camps than they did whole pilots in 2022. So they're seeing absolutely phenomenal growth. And I think that it's becoming a necessity now. And when they switch monetization on for AIP, people will be willing to pay what they need to keep that integrated into their business, because it's changing businesses and it's really giving businesses the competitive advantage. So we've had earnings, and then we had the Tesla earnings as well, which weren't probably as optimistic and as good as the Palantir were. So we saw an upward swing in Palantir because of earnings, and then we saw a little bit of the opposite happen to Tesla because of their earnings. Now, I don't think that Tesla Q3 earnings were the best we've ever had, but they were a bit of a mixed bag. We had the earnings call, which was a little bit, it wasn't great. It wasn't really that confident. It wasn't optimistic by nature. It just wasn't the best. And we had the CFO wasn't there for the first time, which, rocked the boat a little bit. People didn't love that, but people were pretty worried about the Q3 results. They did have some misses for sure, maybe some concerning data, but I would say it wasn't so concerning when you zoom out as a long-term investor. Do you know what? They had some pretty positive things in there as well. Their energy sector is growing very, very well. They had their cost of goods sold coming down, and it came down about 2,000 per vehicle over the last 3 quarters. And then we've had the factory upgrades that have been happening in Q3, obviously, that caused some of the issues that we saw in earnings. It was kind of expected, but that should also further bring COGS down. So that's good. We We had, the news that Cybertruck deliveries were starting at the end of this month, 30th of November, 2023. Earnings did move both of these stocks. So it has been a pretty volatile time in my portfolio. Now, aside from earnings, there's always a lot happening in both of these companies, obviously. With Tesla, we've had some news very recently that they are going to start working on their Model 2, their compact vehicle, their mass affordable car. This is really, really important for Tesla. It's going to change things for both the company and us as investors. Now, I made an entire video on this, so I'll link it up here if you want to watch this after this one. As a Tesla investor, I am very, very bullish on this happening, and I hope that it happens as soon as possible. And then on the flip side of that, we had some negative news. We had HSBC come out and downgrade Tesla to $146 per share and put a sell rating on that, which is incredibly bearish. And I do not agree with that price target whatsoever, but it is what it is. And I think that coming out by such a big bank caused a lot of sell-off of the company, which then caused the stock to somewhat plummet. An opportunity for us investors to actually buy more if we're really convicted on this company over time. Now, some of the reasons that HSBC gave, and you can have a look into these, they said that Tesla's 20 million delivery vehicle by 2030 is overly optimistic, and that Elon Musk has a significant influence on Tesla, and this is quite a high risk. And then they also commented on some of Tesla's projects like FSD and Optimus, and they said they come with really high capital costs, and there are a lot of barriers for Tesla to go through to actually make them possible, regulatory and tech hurdles. I mean, there's some truth in some of that, but yeah, I don't think that Tesla deserved that sell rating and that much of a downgrade. But hey, all it did was give us investors opportunity to buy more. So what's been happening with Palantir outside of earnings? A lot. We've had a lot of news about the NHS Palantir contract. We've had really positive news, really negative news. We've had delays. We've had NHS doctor letters. We've had Alex Carp being interviewed on the BBC, which was a very, very interesting interview, let me say. We've had delays over the fact that there are little use cases, which I didn't really understand. But more recently than that, we've had an article come out saying that Palantir have now been awarded the FDP contract, which is incredibly bullish. But now we just need to wait for that official NHS announcement that could be coming this week. I cover all of this on the channel, so make sure you're subscribed so you don't miss any of that. On top of this, we had two massive price targets, really, really different from each other. We had Citibank giving Palantir a $10 per share and a sell rating. Not great. But then we had Bank of America say that it's going to be worth this time next year $21 per share, and we're very bullish on the company. So it really does seem to depend on who you're speaking to. We've had Jim Cramer and Dan Ives make some commentary about Palantir, with Dan Ives calling Palantir the golden child of AI and saying that there's a lot of evidence in the use cases now to support being really, really excited and bullish on this company. We've had Dresner Advisory Services awarding Palantir as the #1 in AI and saying that actually Palantir received the highest scores in analytical features and functions, model operations, and usability. Yeah, you can see, and that's just high level. That's not going into everything that's been happening. Like I said, I follow these two companies every single day, and I make sure you're up to date with the most important news. So please make sure you subscribe so you don't miss any of that. If you're investing large amounts of money into both of these positions or one of these positions, you need to make sure you're kept updated. So now let's talk about what I've been adding since my last portfolio update. So the positions that I've actually added to are Alphabet, Amazon, Palantir, and Tesla. So 4 positions I've added to since my last update. I have added, let me just have a look at this here. So I currently now own 4.56 shares of Alphabet. Last time this was 4.08. Amazon, I now own 8.06. Last time this was 7.5. Palantir, 393 basically shares of Palantir. I want 500. I'm really working towards 500 of this to get it ASAP. Last time, 381. Tesla, last time was 40. This time, nearly 47. So adding a lot there. So my strategy is basically that I know I want to build up definitely Palantir and Tesla to as many shares as I possibly can as soon as I can. That's my goal. So what I do is I allocate a certain amount of money each month into my portfolio and I just add it as I feel necessary. But what I will do is I'll always keep some money in cash on the side that I will add to any position that I want when it dips. So when we had the Tesla earnings and we saw that after that the stock fell a lot because there was a lot of sell-offs, people shorting the position, whatnot, I used that as an opportunity to buy. Now, I didn't have loads and loads of cash. Like I would have liked to have put 20 grand into each position when it falls, but I'm just doing the best I can with what money I have available. So my goals moving forward with this portfolio. Well, like I just said, I want to add to Tesla and Palantir in particular. I also want to get my ISA utilization to be about 60%. Just quickly, in case you have no idea what that means, in the UK, we have a certain type of account called an individual savings account. That is tax efficient. We do not get taxed on our positions inside of that up to £20,000 every tax year. So from April to April, we get £20,000 that we can add into a portfolio, an ISA portfolio, and it's not taxed. At the moment, my ISA utilization is sitting at 40% in this portfolio. I want to get that to 60 before April. Hopefully I can do that. Give this video a thumbs up if you liked it and you want me to carry on doing these each and every month. And like I said, come and join the Patreon if you want to chat with myself and other great investors every single day. Thank you so much for watching this video, and I'll see you in the next one very shortly.